Assuming you've seen or you've heard us talk about the numbers, your initial reaction, ma'am?
Yeah, indeed. I think if we look back to China's growth picture, China actually started the year on a pretty good note. The January-February activity data show broad-based upside surprise. But in the past couple of weeks, we have seen a number of negative shocks coming in on the external side from the geopolitical side, inflation concern, and therefore slowing global growth, potentially impacting on China's export sector. And then on the domestic side, you have that pickup, a significant pickup in domestic COVID cases, and therefore leading to the upside in terms of mobility restrictions and then lockdown measures in Shanghai and other places in the country. I guess if we look back to the past 2 years, when we had domestic COVID pickup, typically that affected consumption, service activity. So in that sense, today's non-manufacturing PMI, the weakness, is perhaps not totally surprising. I would say what is different this time around is the level of the COVID cases, which is significantly higher, posing the most challenging environment since the Wuhan situation 2 years ago. And then also we do see the impact affecting a significant part of the economy. Our baseline assumes that about 20% of the GDP will face a downside risk in the near term because of the latest situation on the COVID front. So what that means is that we will probably see retail sales, fixed investment, industrial production, as well as external trade, seeing month-on-month contraction in March and April. Hopefully, when the situation gets under control, then we do have some recovery from May onwards. So that brings our full-year growth forecast to about 4.9% for 2022.
Okay, what is the policy offset that you think, well, let me rephrase that, Grace. What do you think is the most effective policy tool that Beijing needs to put in place right now to limit or offset the economic damage?
The government has been saying, even before the latest pickup in COVID, that we should have more policy support to stabilize growth for this year, with their growth target at 5.5%. Indeed, the suggestion is for front-loading of policy support in the first half of the year. So the way we see it is that the government will speed up the policy that have been planned, as announced in the MPC, that including support on the fiscal policy side and for infrastructure investment funded by special local government bond issuance, and also in terms of the support for the corporate sector with tax cuts and fee reduction to a significant extent. On the monetary policy side, we do see a near-term possibility of a policy rate cut. We do look for about 10 basis point cut in the policy rate in April, as well as a 50 basis point cut in the reserve requirement ratio in the first half of the year. If we do have growth numbers continuing to surprise on the downside, there is the possibility of further policy option in addition to what we have penciled in our baseline. So that could take the form of, say, further cuts in policy rate, more supportive measures with regard to the housing market, and even on the fiscal side, potentially some fiscal transfer to the affected households who are more impacted by the COVID situation.
Grace, what does static management mean to you when it comes to COVID strategies in China? Does that perhaps be a signal, if we're hearing this from Shanghai, that this is the strategy moving forward, that China is not ready to exit COVID zero?
Yeah, it is a difficult question. The way we see it is that the government will hopefully be able to bring the situation under control in the coming weeks. But that would still mean that we will face still ongoing risk because of the contagious nature of the Omicron. So in the benign scenario, where we do see the situation, the current situation being brought under control, then we do see the room for a couple of stages of gradual relaxation on domestic restrictions, on domestic travel, and then followed by international travel. But there is quite a number of preconditions required for normalization of economic activity. And that would mean, for instance, improving on COVID-related medicine, improving in vaccination, especially for booster shot for the elderly and the vulnerable, and importantly, changing perception of the public to focus less on the number of COVID cases and focus more on hospitalization, death numbers, and so on. But what all those means is that it is quite likely that it will be a pretty long process for China to get through this current situation, and the whole exit strategy could take up to 1 to 2 years. And then in the very near term, given the experience in Shanghai, it would likely be the case that local governments may actually be more keen to impose stricter restrictions and lockdown measures in the short term at the early stage of pickup in cases, so as to ensure that things get under control very quickly. What that implies in turn is that you could have recurrent rounds of COVID cases leading to slowing in consumption services and therefore the need for further policy support to stabilize growth.
And Grace, maybe walk us through the property side of things as well. You know, we were just talking to China Beige Book yesterday saying the first month has been actually quite rosy. If you take a look at home sales in big cities like Shanghai and the like, are you just as upbeat?
We are actually still quite cautious in the near term in terms of the impact of the housing sector, because if you look at first 2 months and even for March, when our property team tracks property sales by the major developers, the numbers are still showing a pretty notable year-on-year decline for the big developers at for the major cities. So the way we see it is that the China's fundamental housing demand has been slowing, and therefore it would need you would need to have more policy support to stabilize market sentiments and transaction in the near term. And what that means is that at least on a year-on-year basis, you would quite likely continue to see a contraction in the coming months. Only by the middle of the year, second half of the year, that we do expect the year-on-year growth number in property sector activity, transactions, real estate investment to kind of stabilize and then to recover moderately. And in the meantime, continuous policy support signals from the government to stabilize the housing market is all the more crucial.